All right. Welcome back to the podcast and welcome back to the YouTube channel. Wherever you're watching this, I hope you're having a fantastic day. Thank you for joining me again. I am Kraig Strom. I am a paralegal certified financial planner. I have been doing this podcast under the name of Personal Pension Radio for quite some time, hundreds of episodes. And I've taken a bit of a hiatus, a little bit of a break this last few months, and trying to get back on track with the podcast, figuring out where I want to go with the conversation. And I have to say that sometimes I get a bit frustrated with work and life in general, and I'm sure you do as well. And one of the things that I appreciate about podcasts that I listen to is that they are not canned. So what you will generally find with my podcast is that there's no edits. There's just me talking either into the camera. Yes, by the way, if you're listening to this on a podcast, there is a YouTube channel. Find me, Kraig with a K, Strom, Kraig with a K, Kraig Strom. You'll find the Income Engineer and my YouTube channel there. Jump in and subscribe. I'm working on getting past 500 subscribers and really on my way to 1,000 is really the goal. We'll see how that goes. Go over there and check it out. But what I was saying is that there's no edits. There's just me sharing feedback either on financial topics, perhaps legal topics, estate planning, asset protection, retirement income planning is my specialty. It's a passion. But sometimes this podcast is therapy. It is me sharing with you perhaps frustrations, things that are emotional for me because I've been doing this for 25 years, going on 26 years this year. I've been in the financial world and I've been in the estate planning conversation. And sometimes, and it happened again. So today is a bit of a therapy conversation for Kraig. So I've got to share something with you. And this is you'll see by the title of this podcast episode and this YouTube video that it has to do with a doctor client. And I'll just say it, doctors are not always the smartest person in the room. So this actually happened recently. It was a conversation where I got a phone call from someone that I met them at a business conference. I met this doctor. She is a surgeon and she's outstanding in her field. She's brilliant. She's married with kids and, just all of that as a young person. When I met her now 15 years ago, she had no life insurance. So no life insurance. So when we met at this conference, it was, hey, what do you do? I do this. Hey, what do you do? I do this. Okay. Well, she's a surgeon. Pretty cool. And I'm a financial planner. And I said, I do everything from, life insurance to right up through retirement income planning conversations for folks, especially doctors. We have quite a few doctor clients. We also do living trusts and that kind of thing. And she said, oh my gosh, my husband and I, we have one child and we don't even have life insurance. Amazing. So of course I really focused in and said, I'll prioritize that. You definitely want to have a living trust and all this other stuff, but let's get your life insurance done. So way back when, this is 15 years ago, she was the smartest person in the room. When she was in the room with anybody at that time, she was very proud of her accomplishments as a doctor and a surgeon, and you could not argue with her about virtually anything because she's going to be right. And that had served her well because, frankly, becoming a surgeon, let alone becoming a doctor, is an amazing feat. It's incredible. So she's clearly brilliant. That's what I thought then, and I still think that today. However, that arrogance, if you will, that tone way back when, 15 years ago, it was a little worked against her because Knowing what I knew then, even more so what I know today, I suggested that she have at least a $3 million death benefit. Oh, we don't need $3 million. Well, back then, as a young doctor and a surgeon, a specialist, she was making over $250,000 a year. Her husband was an engineer, not nearly making the same level of income that she was. And if she were to be uh, uh, gone all of a sudden, let's just face it, if she had died as a young mom and the primary income earner, that family is devastated financially. So $3 million was kind of a bare minimum for the level of income that she was bringing into the family, and that she would ultimately bring in for the next 15, 20, 30 years. So she argued tooth and nail about $3 million. We don't need it. We don't need it. Well, ultimately, she took the $3 million death benefit, but she refused to take my advice, right? Because back then I'm still a long time, more than a decade in the business, and I've delivered death benefit checks from life insurance. And I've delivered ones that are too low, and I've delivered ones that are high enough to be able to tell a family financially they're going to be okay. But I've also delivered life insurance checks where I've had to tell the family, you better be ready to sell your house because you can't stay here. I've done that, right? But no, she would not hear of it. 15 years is all we need. I'll have plenty of income and money saved up. We won't need that much life insurance after 15 years. We'll have our mortgage paid off because we've got a 15-year mortgage and we're fine. And she refused. So what we did is we got a $3 million 15-year term. It wasn't right, but it was protection for the last 15 years. Now, fast forward 15 years. And over the years, I had continued to stay in touch with this nice lady and her husband and the family, and they had 2 more kids together. So now 3 kids, and she is making $700,000 a year. By the way, over the last 15 years, I had reached out to suggest, hey, you might want to add some more life insurance on, like a 10-year term that will last pay beyond your 15-year term, or maybe get a 20-year term that will last beyond both, and ladder your insurance out a little further. Nope, 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 nope. They would not. They would not do it. She was so stubborn that she just wouldn't do it, and she knew best. She was smarter. She didn't need any insurance, any more insurance. Well, come 15 years now, her life insurance term is up. So if you don't know, term insurance says that your premium will stay level for 15 years. That 15-year period, your premium is $110 a month, and it will never change, whatever that number is. After 15 years, the premium starts to go up every single year you keep the policy, and it can go up a lot. And you generally don't keep the policy. That's how term insurance is so cheap, because the insurance company knows that it's very likely that you will not die and you will not keep the policy once the premium starts to go up. Well, sure enough, we get the phone. We reached out and then got a phone call back, and the doctor is still smarter than me. Now a 25-year financial services life insurance veteran. She's still smarter than me. And her answer was, nah, we don't need life insurance anymore. We got enough money saved up and the mortgage is paid off. We're okay. But you have 3 kids. Yeah, we're fine. I've got plenty of income. We got enough money saved. I said, so you have the kids' college funds completely funded for all 3 kids? Well, no, but we'll get that. We're fine. We don't need it. And we have plenty of other assets that we don't need this life insurance coverage anymore. We're funded. And then she said it. Dave Ramsey says that once you have enough investment money, you don't need life insurance anymore. Oh, gosh. Oh, unbelievable, right? That was part of her rationale, was that she doesn't need life insurance anymore because she's got $4 million saved up. She's earned enough over the years that they've saved up a lot of money. But guess what? It's not $4 million in cash. They bought rental properties when the stock market crashed, right? When the whole world fell apart, they bought rental properties. So their money is tied up in real estate. And remember, they have three kids and a husband who still works. So if she died today, they lose 700 grand a year in income, and they have three kids to finish raising. He's going to need to take time off or hire a full-time caregiver or move, most likely move, because the parents, the family lives back east in the Midwest, actually. So there's no real support crew out here in California. So I adamantly, please, you've got to have some life insurance. I really just pleaded, but there was no amount of pleading, no amount of trying to rationalize this, discuss this. She was the smartest person on the phone once again, and it just blows my mind that she is now that she now will have no life insurance as the primary income earner for her family with young children. Okay, she'll have no life insurance. That's okay. We got real estate. Really? You got real estate. Okay, so you die tomorrow, and in order to replace your income, we have to sell real estate to fund life. To replace your income. What real estate do we sell? Is the real estate market in a great situation the day you died? Maybe, I don't know, probably not, could be. The whole point is life insurance is there for that uncertainty. And she makes $700,000 a year, but she would not dedicate a dime to life insurance anymore. And in her mind, and I know there was more to it, she's like Dave Ramsey on her side says, when you have enough money, you don't need the life insurance policy anymore. And to Dave Ramsey's credit, that is not what he's talking about. I would highly unlikely that you would get Dave Ramsey in a room with that doctor and he would say, oh no, you don't need any life insurance at all. She was using that as an excuse or as a way to, I guess, justify or bolster her own position of, that she's certain we don't need life insurance. Well, I'll tell you this. They chose to cancel it. I say they because her husband had to be part of the decision. Again, blows my mind. But here's the part that I mean maybe really drove this video. Was I got a text message from her and a follow-up email that said, hey, can you help us cancel this policy? And my response was, no, I'm not going to help you cancel the policy. You want to go ahead and make a bad protection and financial decision for your family, go ahead and make the phone call yourself. I'm not going to help you make a horrible decision and go completely against any sensible financial planning advice that might be out there. Okay. So now, it's unfortunate. It happens. But this was a case where the doctor is absolutely wrong, not the smartest person in the room in this case, for sure. Okay. Now, if you have questions though, like, hey, Kraig, how much life insurance should we have? How long should we keep life insurance? What kind of life insurance should we get? Is this good or is that good? Is this right or is it wrong? Right? I'm being pitched this idea at work. Somebody wants to sell my company life insurance. Send me an email, Kraig with a K at kraigstrom.com. As you can tell, I am passionate about this. I feel terrible that I did not figure out a way to convince this doctor to keep life insurance on the family. But I know for certain that I tried. And I hope nothing bad happens, of course, right? And I don't want that to be the case for you. If you have questions about life insurance, retirement income planning, you want to get your estate plan done, your living trust, your wills and powers of attorney and all that, send me an email, Kraig with a K at kraigstrom.com. And if you're not watching this on YouTube, you have to check out my new set and comment and let me know if you notice the photograph that makes me smile every time I see it in the background. Okay. So anyway, that's going to take it for now. I'll talk to you again real soon. Bye for now.
Information presented is for educational purposes only and is not intended for solicitation, sale or purchase of any security or financial product. Be sure to first consult with a qualified financial advisor and your tax professional before implementing any strategy discussed here. The term personal pension refers to a marketing name designed to educate future retirees and retirees about the economic principles behind creating their own pension-like income. The term personal pension is not intended to be confused with a defined benefit pension plan offered by an employer or by a government entity.